Are you interested in starting investing? Let's get down to business. Hey everyone, I'm Brandon, I'm a CPA, and today we're going to talk about how to get started investing. And a quick note before we get started on the video, if you want to receive 2 free stocks valued up to $1,400 using a trading platform called Webull, click on the link in the description below. All you have to do is sign up and deposit $100. And now let's get on to the video. Today I'm going to be talking about a few different things, from the different types of investment vehicles to the different trading platforms, and also some basic investment strategies. Topic number 1, investment vehicles. So what is an investment vehicle? These are things like a 401k, traditional and Roth IRAs, individual brokerage accounts, things of that nature. And with these different types of investment vehicles, you can make all sorts of investments, like buying individual stocks, index funds, mutual funds, options, crypto, foreign exchange, bonds, you name it, you can probably invest in it. A 401k is a retirement account typically offered by your employer. And this is similar to both traditional and Roth IRAs in that they're all retirement accounts. They all have their own benefits, particularly with taxation, but they also have their different costs. One of them being that you can't take out the money unless you're 59 and a half. And also, if you do take it out, you'll get penalized. With IRAs, those are typically investment vehicles that you would contribute on your own without the need of an employer. And the difference between a Roth and a traditional IRA is when you would get taxed. With a traditional IRA, you would defer the tax. So what you would end up doing is making contributions, and once you end up collecting or withdrawing the money when you're 59 and a half or older, you would then pay tax at that time. The difference with a Roth IRA is that you would pay the tax up front right now before you make the contribution. And so that way, when you collect the money when you're 59 and a half in retirement or older, you wouldn't have to pay the tax then. Either way, any of these investment vehicles are great for retirement. I highly recommend utilizing the 401k, particularly if your company offers a match. I talk about this a little bit in my previous video, 6 Steps to Financial Freedom. If you want, you can check that out right over here. But the general gist is you want to invest up to the company match. Otherwise, investing in traditional and Roth IRAs do have their benefits, but I don't think they actually outweigh the costs. The reason for this is that you can invest in index funds or individual stocks, really whatever you want, without having any penalty for withdrawing. The only thing is you do have to pay the tax when you do end up cashing out or selling your investments, but it ends up making your cash a lot more liquid. So I end up actually steering more towards that camp and really not contributing so much to an IRA, but using the individual investment accounts to start investing. And this brings us to our next topic, investment platforms. There are so many different platforms out there nowadays. It can be difficult to figure out which one is right for you or which one to choose. You have E-Trade, Fidelity, Charles Schwab, Robinhood, Webull, you name it, there's a trading platform out there. It seems like everybody's trying to get into the game, but essentially they're all the same. Once you get used to one, you'll kind of get the idea of how the rest work. I actually use every single one of the ones that I just mentioned previously, and I use them for different reasons. So for instance, for E-Trade, I use that one for medium to long-term investments. For Fidelity, I use that for my 401k. Charles Schwab, I use that for my IRA. Webull, I use that for day trading. And Robinhood, I use that for dividend investing. And I know that sounds a little crazy, but the reason why I use these different platforms is because for myself personally, I like to utilize these platforms to kind of diversify my money and keep them all separate. And that way I can track the growth of each individual account and see what investment strategy is working. If the dividends are working, or if the long-term investments are working, or the day trading, and I can kind of pick and choose and put more money into one account versus another and really see the progress as time progresses. And my particular favorites of the ones I mentioned are Webull and Robinhood. And the reason why is because they have pretty good trading platforms on mobile. And so I pretty much do all my trading on mobile. It's, for me, the easiest way to do it. And so their layout is by far the easiest for me to use. And so that's what I use mostly for my day-to-day. And speaking of those platforms, I actually have a couple links in the description below. If you want to get 2 free stocks on Webull or 1 free stock on Robinhood, go check it out in the link in the description below. Click on it, make an account. For Webull, you have to deposit $100 and you'll get your free stocks. And so that leads us to our last topic, investment strategies. And one thing that I highly recommend is, if you're just starting out, is to stick to index funds and individual stocks before you start venturing out to all these other things like foreign exchange and cryptocurrency, because these are very volatile and risky markets. And even right now, the general stock market can be pretty volatile with our current market conditions. But crypto and all these other ones require a high degree of skill, a high degree of experience and research. And so I don't really recommend dipping your toes too much into that in the beginning. Just stick to the basics and see how the stocks move based off of your investment choices. I particularly like the safe ones if you're just starting out. And so these are good index funds like the S&P 500, or good stocks from businesses that you think are very good, that make a profit, that you think will stick around, stuff that you actually buy from. These are kind of where I like to draw my inspiration from and how I invest. And once you get the gist of investing in those index funds and stocks, you can kind of venture out and explore a little bit more into some riskier investment options for you. But again, I really only recommend this if you're a little bit more advanced and skilled. There are a lot of different stories about people losing a ton of money or even gaining a lot of money. But the thing is, the risk reward can be pretty astronomical. And if you're not prepared to lose it all, then don't invest it. This is why you want to invest in those riskier options when you have a little bit more knowledge in the stock market or any other market that you choose to invest in, and also a lot more cushion to fall back on if things go south. Another great tip and strategy that I use is dollar cost averaging. So what this means is continually investing no matter what the stock market does. So what I do is I invest weekly into index funds and stocks continuously. So if I get a paycheck, I'm investing every week, every week, every week, every week. This way, over time, my money grows whether the stock market is up or down, because over the last 100 years, the stock market has continued to climb with an average of about 7% per year. The idea is you want to keep investing consistently. If you miss out on some of the best days, you really diminish your returns. So my advice is invest, invest, invest safely in things that you think you're going to do well and things that are proven, like the S&P 500, and also really good companies. And if you're here for a get-rich-quick scheme, unfortunately, this is not the video for that. If you're considering day trading and trying to play the market, trying to time the market, there are definitely strategies for that, but particularly for beginners and particularly for people that don't have a big enough cushion, a big enough foundation to fall on, I really don't recommend it, especially if you're a full-time worker. If you're day trading, it's a little bit hard to be focused on your job. And I understand there can be great benefits to it. There can be a lot of money that can be made in it. But the other issue is that day trading is actually a 24-hour cycle. You have to be on the news all the time, researching. If the stock market goes up, if it goes down, you have to be prepared to buy, to sell, stop losses, everything. So what ends up happening is that it can get pretty consuming in your life and can affect other things like your work or your relationships or whatever it may be. So unless you're experienced and have a good cushion to fall on, I really don't recommend day trading because it can be very similar to gambling. And I definitely don't want you to lose money on gambling, because believe me, a lot of people have done it. So in conclusion, investing is pretty easy once you get to the bare bones of it. It's really just buying stocks, holding them, and eventually selling them when you're ready to trade in that investment for either retirement or to cash in. And the trick is to continuously invest, particularly in great index funds and great companies. So do you have any questions about investing? If not, is there anything you would add to my list? Leave it in the comment section below. I'd love to hear you. And if you've made it this far, I'd really appreciate it if you'd like and subscribe to my channel. Click the bell icon, and if you think anybody that you know could use this information, please feel free to share the video. Also, don't forget to check out the links in the description below. I'll see you in the next video.